you're hearing me, please give a thumbs up. Good morning. Welcome to Scotia Group Jamaica Limited's Q3 results briefing. A special welcome to our media partners joining us online. I am Kimberly Gardner, Public Affairs and Communication Manager, and I will be your moderator this morning. Our panel this morning from left to right, that is my left, right. Gary Vaughan White, Senior Vice President, Collateral Protection. Maurice Nelson, Senior Vice President, Corporate and Commercial Banking. Yvette Anderson, Head, Sales Distribution. Audrey Tugwell Henry, President and CEO. Deborah Lopez Spence, President, Scotia Jamaica Life Insurance. Gabriel O'Connor, Vice President, Finance and Chief Financial Officer. Sabrina Cooper, Senior Vice President, Wealth Management and CEO, Scotia Investments. And finally, Adrian Reynolds, Vice President, Treasury. Without further delay, let's get right into our results. We will take your questions afterwards. Feel free to use either the chat or open your mic to ask your questions when the floor is open. Audrey, over to you.
Thank you, Kimberly. Good morning, ladies and gentlemen. Let me express my welcome and thanks to you for attending our Q3 media briefing. We know you could have been doing something else, but thank you for joining us. This morning, Scotia Group is very pleased to report net income of $14.8 billion for the 9 months ending July 31st, 2025. Representing an increase of $764 million, or 5.5% over the previous year. In line with our commitment to continue to deliver shareholder value, our board has approved a dividend of 45 cents per stock unit for the third quarter. This will be payable in October 2025. This performance of Scotia Group reflects the execution of our 4 strategic pillars: client primacy, client experience, employee well-being and winning as one team, and finally, sustainable revenue growth. We are relentless in our vision of being our clients' most trusted financial advisors, and so our strategy is built on a foundation of robust risk management and good governance. Our 9-month financial performance was bolstered by revenues from core business growth. For the period ending July 31, 2025, net revenues increased by 11.5% to $48.4 billion over the prior year. We're also pleased to announce that this 9-month performance represented positive contributions from all business lines and all subsidiaries. Scotia Investment Jamaica Limited, which performed very well over the 9-month period, recorded a 26% increase in net income before taxes. This net income was driven by core business performance with assets under management growth of 12% from $207 million to $231 million. Scotia Jamaica Life Insurance Company also performed well, and the company reported an increase of 9% before taxes. Gross written premium in SJLIC grew by 8% to $8.1 billion. And our newest subsidiary, Scotia Jamaica General Insurance, increased 144% over the prior period. In SJIA, we recorded increase in gross written premium of 65%. The Bank of Nova Scotia, the largest subsidiary in the group, recorded a 6% increase in net income before taxes and excluding intercompany dividends. This performance was driven by core growth in loans, deposits, and total transactions. In turning to our balance sheet, we are very pleased with our asset growth, which grew by 8.75% to $752.8 billion, driven primarily by a significant increase in our loan portfolio, which grew by $49 billion or 17% year over year. We're particularly pleased with our loan growth because it reflects strong credit quality. And when we look at our net or non-accrual loans to total loans, that is actually declining, albeit that we're experiencing significant growth in the portfolio. Our corporate and commercial banking loan grew by 12% year over year. Our retail mortgages grew by 22% year over year. Our flagship Scotia Plan loans grew by 17% year over year, and our credit card portfolio by 7% year over year. Again, I emphasize that our risk is very well managed. That's one of the strong points of Scotia Group. We are great at managing risk, and as I indicated, it is a foundation on which we operate. Strong risk management and sound governance. Our risk of loan losses is well provisioned, as accumulated credit loss provisions as at July 2025 is $6 billion, representing 123% coverage over our non-performing loans. As a financial services group, we take the confidence that our clients place in us very seriously. And so we're very pleased that as at the end of July 2025, we saw a 9.3% increase in our total deposits, increasing up to $516.3 billion. We're very proud of our financial performance. For the reporting period, our return on equity was 13.3%, our return on assets 2.61%, and our productivity ratio continues to be best in class at 51.73%. And you know, productivity ratio is the same as our cost to income ratio. In terms of capital, we continue to exceed regulatory capital requirements in all our subsidiaries. Our strong capital position allows us to take advantage of growth opportunities in the future. We're also very pleased that we continue to be recognized for the strong performance of our business, and not just local recognition, but also international recognition. We're pleased with our Best of Chamber award that we received for large category from the Jamaica Chamber of Commerce. We're also very pleased with winning the Euromoney Best Bank Award for 2025, and we are also very pleased with winning the award for Best Pension Fund Management from World Finance. So in closing, let me take this opportunity to thank all our clients for continuing to rely on us and to do business with us. I want to thank our shareholders for continuing to investing in us. And I also want to thank our board of directors for their guidance and stewardship over the Scotia Group business. And finally, as well as most importantly, thanks to our professional team of Scotia Bank employees and Scotia Group employees who continue to deliver excellent service to our clients every day. I'll now hand over to Gabriel, who will give some further financial highlights, and then to our business line heads, who will give highlights on their business performance. Thank you.
Good morning, everyone. As Audrey mentioned before, the group is reporting net income after tax of $14.8 billion, representing an increase of 5.5% over the previous year. This would have been driven by higher net interest income, which reflected an 11% increase stemming from the excellent performance of our loan portfolio, which grew by $49 billion or 17% year over year. Total retail loans increased by 18%, with our commercial loan portfolio growing by 12% year over year. We also continue to execute well on our strategic priorities, and we have seen improvement in our portfolio performance, leading to higher insurance revenue, which grew by 56% year over year, as well as we benefited from lower claims expenses during the quarter. Total fee revenue increased by 14.3% year over year, driven by higher transaction volumes, as well as a strong growth in our asset management portfolios, which grew by 12% year over year. Quickly looking at our operating expenses as at the end of the quarter, total operating expenses grew by 16% and was primarily attributable to three main drivers: or year-over-year increase in our staff benefits and salaries, driven by the reduction in the pension credit, as well as inflationary increases. We also saw higher technical service expenses as we continue to invest in our digital initiatives, focusing on deepening our client relationships, improving primacy, as well as making it easier for our clients to do business with us. And finally, we saw increases in our cash transportation expenses. On a quarter-over-quarter basis, our net income increased by 11% year over year, driven as well by higher net interest income, fee and commission revenue, as well as foreign currency activities. Overall, our core business and our segments continue to perform well, and the group continues to deliver sustainable revenue growth, anchored by the efficient management of our operating expenses, which resulted in us closing out the quarter with a best-in-class productivity ratio of 51.73%. Thank you.
Yvette.
Okay. Good morning, everyone. Customary with previous quarters, for Q3 was another great year for retail banking. We continue. Okay, thank you. Do I need to start again? Customary with previous quarters, in Q3, retail had another great year. We continue to see exponential portfolio growth in both our small business and personal portfolio. During Q3, our portfolio for mortgages grew 22% year over year, our Scotia plan loans by 17%, our credit cards 8%, and deposits 9%. This growth was spurred by strong client requests based on our competitive offering. We value the confidence and decisions that our clients have made and their decision to continue to partner with us. And so we continue to conduct ongoing reviews to ensure that our processes are efficient and client-centric. And so with that, we are not surprised that we're seeing such a strong demand for all our products. We continue to listen to our clients, and one request was, our clients asked, we need to be able to see or know when a deposit is made to our account. We're happy to say that we have now launched deposit alerts, and our clients are able to see their deposits in real time. So overall, very great performance for Q3. We want to recognize the contribution of the staff. Their unwavering support and commitment to making it easy for our clients is worthy of recognition. We thank all our stakeholders and support persons who have gotten us here. So again, thank you.
Good morning, and thank you. I'm pleased to provide an update on the performance of the commercial banking division for the last quarter and to give some insights into our performance. The corporate and commercial banking segment is a material contributor to the overall group results. Revenue growth for year over year rose by 9%, fueled by higher transaction volumes and increased loan interest income. Our loan book grew year over year by 12%, outpacing the industry, which at June was at 7%. This was primarily driven by increased lending to the manufacturing and productive sectors, supporting companies in increasing their capacity and or reducing costs, which is a positive augurs well for those companies' contribution to the economy in the future. Our deposits continue to grow, reflecting our clients' continued confidence in our bank and our efforts at garnering a larger share of their day-to-day banking business. Our team remains committed to sustainable business growth. We are focusing on acquiring new clients, deepening relationships with our existing clients, and on service excellence. We have made strategic investments in Scotialine Scotia Online for Business, enhancing our self-service channels for payments and for FX, our transaction capabilities, and our clients have rewarded us with increased volumes. We're especially proud of the results of our client survey conducted in the last quarter, where we have, I would say, achieved best-in-class Net Promoter Score results. Our clients have identified our high satisfaction among our relationship managers, ease of transaction processing, and strong approval of our products and services. Clients have expressed a clear intent to increase their business with us and to refer other companies, reinforcing the strength of our value proposition. As a business, we'll continue to work to earn the trust of our clients, listen to their needs, and respond accordingly, which we believe is a key ingredient to sustaining our business over time. And so I'll pause here and I'll take any questions during the Q&A.
Morning, everyone. So I could sit here before you today and, wax lyrical about the significant year-over-year growth in the business here at Scotia General Insurance Agency. I could tell you about the 65% growth that we saw in gross written premiums and breaching that $1 billion mark for the first time in a financial year. I could tell you about the 57% growth in policies on our books. Or I could tell you about the 75% growth in revenues year over year. I could also tell you about the 123% growth in NIAT year over year. I could speak to you about the industry-leading retention levels at 91%, and the fact that in just 2 years, we became and continue to be the top agency as measured by gross written premiums for GKGI's extensive intermediary network. And we're closing in on that #1 position. However, team, I prefer to remind you about some of the unmatched value propositions we offer to our clients here at SGIA. And let me just pause here to say a big thank you to them for choosing to stick with us over these past 2.5 years, and particularly over these past few months. Here are just a few of the reasons our clients have told us they have chosen and stuck with us. Flexibility. They can choose from either of our 3 comprehensive plans: Essential, Preferred, or Ultimate, and our 1 basic or third-party plan, depending on their budget and the type of benefits they wish to include in the coverage. Affordability. Our rates are very competitive, and the interest-free monthly pay option helps them to better manage their cash flows and disposable income. And finally, convenience. They can get quotes and purchase their home and/or auto insurance anytime and from anywhere via our scotiaprotect.com website. Additionally, our top-notch general insurance advisors are just a phone call or an email away, and they're ready to assist and serve. Finally, the automated renewal feature which is offered means that there is no hassle or worry if you forgot about your insurance expiring, because renewal documents are automatically sent to you electronically. So team, just want to say thank you to the clients for continuing to stick with us and choosing us. Want to say thank you to team members across the Scotia Group, Jamaica, institution for referring clients to us. And we say, look forward to bigger and better things as we forage forth. Thank you.
Good morning, all. Very pleased to share the results for Scotia Insurance, which reflect both strong execution and strategic alignment. As mentioned earlier, we delivered net insurance business revenue of $2.6 billion, 56% year-over-year growth, a result of strong core insurance growth. Our gross written premiums were up 8% year-over-year, both on our creditor and non-creditor life books of business. We continue to lead the market for approved retirement schemes with the highest number of plans across the industry, a demonstration of our commitment to ensure every client can achieve their retirement goals. This is a testament to the strong cadre of financial professionals having the right protection conversation focused on our priority client segments and supported by our client experience teams and business support teams who are always looking to provide the highest level of experience. We also made it easier to do business with us. Our non-branch channels, the Scotia mobile app, Scotia Access, our website and contact center continue to grow in popularity, a demonstration that our clients want convenience. They want the choice. They want us to meet them where they are at for both advice and service. In Q3, we launched our Don't Leave Them Alone, LOAN campaign to educate our clients on the benefits of credit life protection. This has been very well received by the market, knowing that they should they become ill or worse, their debts will be expunged. Credit protection is available through the branch network, through our retail banking officers, the contact center, and digitally for Scotia Plan loans. And we're pleased to share that credit protection will also be available digitally for credit cards before the end of our calendar year. In summary, Q3 was a quarter of growth, innovation, and impact, and we're very well positioned to finish the year strong and head into the new fiscal with the right momentum. Thank you.
Good morning, everybody. Happy to present today and share Scotia Investments results for our third quarter. We've had another strong, very successful quarter. We continue to show good growth year over year in all our major KPIs. Not only from a financial perspective are we happy to see the results, but very importantly from our client perspective. Our assets under management have grown 12%, which again is a testament to our clients choosing Scotia Investments to be their trusted financial partner. The increase is mainly driven by growth in our mutual fund and unit trust products and has been bolstered by very strong activity from our brokerage and advisory teams. We're seeing great momentum from many initiatives to refocus the business on client primacy, client experience, and operational efficiency to make it easy for clients to do business with us, all in an effort to continue to drive fee income and sustainable revenue growth. Very notably, I want to share that Scotia Investments has recently launched via our Scotia mobile banking app as well as online dynamic client statements, where our clients can now see all of their brokerage products and investment holdings by asset class as well as many other features. Our asset management and fund management business has had a great quarter and continued to make strides year on year. They've posted positive returns on all of our managed unit trust funds and have 3 of our 7 unit trust funds ranked first among its peers year to date, a testament to the competitiveness as well as the research capabilities that our asset management team has at their disposal, both locally, regionally, and globally through the strength of our wider group. We're also very proud to share that Scotia Investments has been awarded by World Finance Best Pension Fund Management Company, not just in Jamaica, but throughout the Caribbean. We're seeing strong client acquisition numbers, strong transaction volumes, and of course the correlated revenue growth. Our client metrics, as measured by Net Promoter Score, are at an all-time high, as well as our advisor satisfaction. This is our clients, our very valuable clients, telling us how satisfied they are with the advice and service that they are getting from our front office and advisory team. In closing, I want to say thank you to our clients for choosing Scotia Investments. We know you have options, and we're grateful for the confidence that you have placed in Scotia Investments, and we continue to earn your trust every day. We also want to thank the wider team at Scotia Investments as well as the group for their continued support, guidance, and collaboration. Thank you, and I'll pause for questions at the end.
Good morning, everyone. As indicated by my team members and as demonstrated in our financial results, our business lines delivered a strong Q3. Treasury is very proud of this achievement, and we continue to focus on balance sheet strength. I want to also point out that capital remains comfortably ahead of regulatory requirements. Liquidity and liquidity metrics also remain very strong. And going forward, we'll continue to optimize liquidity and position the balance sheet for even more growth in the future. I'd like to stop there, and I'll take questions in the Q&A. Thank you.
Thank you, team. Just a reminder to our guests that you have the option of either sharing your questions in the chat or raising your hand and opening your mic to ask. We have 2 questions. David, I see your hand. We have 2 questions so far. Stephen Jackson wants to congratulate us on the profit. However, he would like to know, we recorded a total comprehensive loss of 7.6 billion, its highest total comprehensive loss in ages. Question, can you walk us through the pension fund impact? And we're going to ask Gabriel to answer that question.
Thank you for that question, Stephen. So you're correct in saying that the reduction noticed in the other comprehensive income is driven by the valuation of our pension. And in accordance with the standards, we are required to value our net pension asset on a quarterly basis. And the ICAJ would send out to the market the assumptions that are to be incorporated in that valuation on a quarterly basis. We would have seen an increase in the discount rate, as well as a maintaining of the inflation rate that was included, and that led to an overall reduction in our asset ceiling, which is the value at which we are required to carry that pension asset on the balance sheet. So from time to time, you will see fluctuations in that net pension asset. It does not, however, impact the fair value of the actual investments that secure the pension portfolio. It does not impact the pension payments itself, nor does it have an impact on the surplus that is maintained by the fund. It is strictly in relation to the fair value of that net pension asset that's reflected on the group's balance sheet. So you will see swings from time to time depending on the assumptions that are incorporated in the model, and those adjustments are reflected through other comprehensive income.
Thank you. Thank you, Gabriel. Stephen also states that he observes a multi-billion-dollar reduction in cash flow, and he suspects it's done to finance loans in the year to clients. He's asking if this is so.
That is also correct. So the reduction that Stephen is referring to was driven by the excellent performance and growth of our loan portfolio.
Thank you for that, Gabriel. Technical difficulty there. We'll now go to David Rose with his question. Go ahead, David.
Thanks. I just got a chance to actually ask questions. Good morning to the Scotia team and everybody else present in the session. So, the Scotia Bank, Bank of Nova Scotia Jamaica Limited, BNSJ's loan growth, is quite phenomenal when you put it into the context of, year-over-year comparison. So I take note that, during the last quarterly briefing, we would have asked about the growth in the mortgage book and the overall Scotia Group being the largest mortgage player in the market now. But when I actually took another look at the segment analysis, I realized that, retail segment, it's up by like $2 billion basically year on year, which is about 11% in terms of overall revenue growth. This is for Gabriel O'Connor, or, the respective executive. Is the growth in the retail segment, a reflection of, Scotia's competitive rates alongside, just an increased demand for credit on a whole?
So I'll jump off. So, David, thanks for the question. At the beginning of my presentation, I spoke about the focus on our clients and that client primacy is a key strategic focus for us. And so what we're doing is, as you know, we have a large client base. We're working closely with our clients to meet their needs. So what you're seeing is we're having significant increases, as Yvette mentioned, in new client requests for loan products. But at the same time, we are also experiencing good growth because our clients are placing their deposits with us. We're also experiencing growth in the volume of transactions that we're doing. So this is not just a loan play from us. It is looking across the spectrum of our clients, looking at their needs, and being able to fulfill and satisfy those needs. So if you notice, we had significant increases in gross written premiums in both insurance businesses, increase in assets under management. So the loan demand reflects our focus on working with our clients, looking at what their needs are and fulfilling those needs. So it's not a mono product sort of a play.
Al, I see your mic open. Is it that you have a question?
Hello? Hello?
Hi.
Hello?
Hi, morning. Al, we're hearing you. You're now muted. You're now muted.
I was going to follow up with Audrey's response.
Okay, David.
Can I go to Kimberly?
Yes, go right ahead.
Thanks. So I appreciate the context you gave there in terms of it being a mono-product kind of perspective. I appreciate that. So I appreciate the context that, Ms. Lopez mentioned earlier in terms of the non-bank channels, for example, insurance. And I've seen that, you guys have been adding more technological support, to enhance the overall experience. Gabriella kind of spoke to the increased cost from a technology perspective. So with respect to, the way forward, could you give some context on the technological initiatives going forward? So like, for example, you added the deposit notification feature in the app. On the investment side, clients can now get their statements. I recall Scotia said they were supposed to introduce wire transfers online. So, just context on the technological side, basically.
No, so you're correct, David. Wire transfers by way of online or mobile for clients will come. Further developments in technology for our clients for insurance products will come. When we launched our Scotia General Insurance Agency, we launched it with a digital platform that allows our clients to do their insurance requests end-to-end digital. So the expectation, what you can expect from Scotia Group is continued investments in technology to make it easier for our clients to do business with us. We have in our retail business, and I'll ask Yvette to speak to that, we have what we call Scotia Access, which allows clients to interface with us singularly and digitally and virtually, as well as e-consent, which is added, which allows our clients to sign electronically without coming into the bank. So, Yvette, you want to talk a little bit about the increases we are seeing and the usage of e-consent, as well as how Scotia Access is supporting ease and convenience for our clients.
Sorry, thank you. So we have assessed the needs of our clients. They need to be able to access loans and our services with relative ease. And so this is what has triggered the implementation of what we call our DCT, or where our clients can, our digital consent consent technology. It's a platform in which our clients can interact with us digitally. So, for example, they no longer have to come in branch to complete an application or to sign forms. They can be signed digitally. That saves time, that saves effort, and makes the process simpler and easier. So it's about convenience. In terms of the Scotia Access, we try to look at the client's need in a fulsome way. And we assign dedicated officers who are able to serve them in a dedicated manner in a way that augurs well for great experiences. We're also looking at refining the value proposition that we offer to our clients to enhance the overall service. So the Scotia Access or digital access to being made available to our clients is just one of such initiatives.
Thanks, Yvette.
Hello?
Yes, Al, you may go right ahead.
Hello, good morning, everybody. Can you hear me?
Yes.
Yes, Al,
Yes,
we
we're
can.
hearing you
Okay.
clearly.
This is a question for probably Audrey. Audrey, your retail mortgages grew by 22%, loans grew by 17%, your insurance grew by 56%, and your assets under management by 12%. How much is that attributable to you or, well, Scotia taking away market share from your competitors? What factor did that play in that performance?
Okay, thank you, Al. So we're seeing shifts in our market share, positive shifts. We are very well positioned to take on new clients, and as a matter of fact, we do open significant number of new accounts through our retail business every month. So a lot of the growth that you're seeing, some of it is new client origination, while some is increased business with our existing clients. And when you talk about a strategy, it might sound very blasé or very simple, but the strategy of client primacy is one that allows us to look at our existing clients, see how much business they're doing with us, and go after the other areas of business that we're not serving them in, or to really get a deeper wallet share from our clients. So you are correct. Some of it is taking market share away, but the underlying strategy is not a market share growth strategy. The underlying strategy is a client primacy strategy, making sure that our clients are doing their day-to-day businesses with us. They're borrowing from us if they have borrowing needs. They're saving with us. They're investing with us. We're bringing our insurance products to give them the protection that they need. Now, having said that, it obviously has resulted in some market share shifts, and that's fine. But the underlying strategy is not a market share play. It's a client primacy. It's a client primacy play, a deepening of relationships with our clients. And given that we have a large base of over 850,000 clients across the group, that makes for great core growth. And I want to double click on the matter of core growth, because our strategy is one that focuses on sustainable growth, right? You might see some swings on the balance sheet, as Gabriel spoke a little bit about impacts on the pension credit and how that will affect our comprehensive income numbers, but you'll never see that in our P&L, because we build up core growth, we build deep client relationships, and we continue to add more client businesses, and that results in a stronger financial performance for the group.
Just a quick follow-up. We now see the return of a JLP administration, probably back to status quo. How do you see the remainder of the year, both for the economy and for Scotia, Jamaica?
So for Scotia Group, Jamaica, we're very optimistic. We're very well positioned to continue to grow and continue to meet our clients' needs. As Gabriel also indicated, some of our increases in expenses that you're seeing is as a result of investments that we've made in technology. So we're very optimistic in terms of our outlook for the business, because we have laid a strong foundation, build a solid foundation on which to continue to dominate the market and to be the most relevant financial services group in the market. In terms of the Jamaican economy, I also have a fair level of optimism. I think once we got past the fiscal hurdle issues over the last few years, then that gives us an opportunity to start to focus on growth. And I see a very reassuring level of political maturity in our country that also feeds my optimism and feeds the optimism of Scotiabank in continuing to do business in Jamaica.
Thank you, Audrey.
Thank you as well. Thank you, team. If there are no further questions, there is another question. David, go right ahead.
Thanks. So last year, Scotia Bank across the Caribbean, you would have introduced the online feature for new clients to sign up for accounts. We would have also seen, different channels, introduced over the last couple of years to migrate more and more of the client business, towards a digital focus. I know that Scotia is over 95%, of transactions done digitally, but in terms of, moving more of that, what one would call physical business online, you mentioned Scotia Access, you mentioned e-consent. The first part of the question is, how has the digital online onboarding process, been taken up in terms of clients' feedback? And, just in terms of how is the continued technological shift, towards the digital space, improving the cost and operational efficiency of Scotia Group?
So there are two things here. Thank you for your question, David. The first one is that our digital play really is around making it easier for our clients to do business with us. And we recognize that as we continue to grow, it's difficult to operate in a manual environment. So part of the plans for digital over the many years was to make sure that we can make it very easy for our clients to do business with us. And so a lot of client-centric focus and thoughts go into how we deploy digital to the market. And sometimes we take a little longer than the market would like, but we want to make sure that we get it right. So that's the first thing. The second thing is obviously it is more efficient. And where we are now in terms of total retail transactions done within the digital and or non-branch spaces versus in branch is we're down to only about 1.6% of total transactions being done in branches, financial transactions. So we're below that 2% mark and closer to 98%. We're more 98% transactions done digitally. And the same for commercial banking. We're way past the 95% of total transactions being done in the digital space or the non-branch space. So that's a plus. It's a plus for the bank because it's more efficient. However, and it's a plus for the clients because it gives them a better experience. Now, having said that, we still have to invest. So even though it's efficient, there's a cost to the investment that we have to make in deploying the technology to the market. And there's also the cost of managing the risk of operating in a digital space. But overall and net, it's a great value proposition for our clients, and it is very efficient for the bank to continue to grow using digital technology.
Thanks, Audrey. And just a couple more questions before I close out. So, just to follow up, I realize that Scotia Life, is benefiting, as Ms. Lopez have indicated on both the creditor and non-creditor life segment. Is most of the growth coming from the creditor life segment, which is due to the growth in the commercial bank, and also in terms of, just the new product introductions over the last couple of years, how has that been taken up by the market?
Thanks for that question, David. So definitely we are seeing strong growth in creditor because of the continued growth that we see through retail banking. So they work hand in glove very nicely. And, offering the credit protection through our other channels, the contact center, and digitally also allows for our clients to have that improved experience. But notwithstanding that, it's on the non-creditor life side is where we have actually seen more of our gross written premium growth. And that really is a function of ensuring that our advisors are going deep with our clients. Primacy is the focus. And so ensuring that we go very deep and are having the right conversation with these clients is extremely important. And that's what's helping to drive the gross written premiums on the non-creditor life side. And yes, you're correct. We would have made enhancements to our products over the last couple of years. We tripled the coverage in our Criticare product, and we have seen incredible take up there. In fact, we are, over year on all of our products in terms of originations. We would have also moved to Scotia Bridge multi-funds, where our clients can now, based on their personal needs, customize their asset allocation. And this as well, we have seen, continued growth in Scotia Bridge. And we would have launched Scotia Elevate, which really allows for convenience, customization, and a higher level of coverage. So, we continue to look for ways to improve, to make sure that the value proposition to our clients is strong. And we're also looking for ways to take those products to the digital channels to make it easier for our clients to access.
And David,
Thank you, Deborah.
David, thanks for the question. I'm going to ask Sabrina to just double click on her update regarding the improvements to our client access on their statements. Sabrina?
Sure, thanks for that, Audrey. As I mentioned in my opening remarks, the online statements is something that we've been looking to enhance for many months, and it has rolled out recently. Great feedback from our clients. Clients can now search and filter by asset class and see a holistic picture of their financial holdings through our brokerage team. We have other enhancements that we're looking to do in further releases, so you can look out for that, David and team. Very excited to listen to the voice of the clients. Their needs are changing. We are aware that digital is the future, not only for viewing statements and transactional activities, but also in interacting and garnering advice. So in coming months, we'll also be launching a live chat where our clients can talk to advisors remotely. No longer will our clients have to jump in their car, drive to a location, and speak face to face. Of course, we'll have that availability to our clients, but we want to give them options to be able to access the advice that they would like from Scotia Investment. So working on our roadmap, looking at the client needs and building it out in, you use the terminology chronological way. It's our roadmap that we've built out. So we have many months of activities to come, and we'll be happy to share in coming quarters.
Thank you, Sabrina. And David, the important thing is that the clients get the data refreshed every day. So it's no longer a monthly statement. They see refreshed information on their investment portfolio on a daily basis. And we've had very positive responses on that. Thank you,
Thank you very much
Sabrina.
for the response, Audrey. And
Hello?
just a follow to what you'd have asked, you'd have mentioned earlier, Audrey. I know that the online wire transfer is still in progress. Is there any timeline that can be shared with that introduction?
No, well, I don't know if Yvette has an updated timeline, but we expect to see it sometimes in 26. And that's for our retail clients.
Work is,
Maurice, you want to talk
Work is
about
being done
your
and
commercial clients?
No, I mean, we have made some recent improvements for our commercial clients. So there's quite a bit of information now on our portal in terms of the beneficiary banks, etc. And so our clients have really given us positive feedback on that. I think that has now paved the way for us to move that into the retail space, and so we're going to be seeing that soon moving forward.
Thanks, Maurice. And I think I'll just leave my final query for Gabrielle O'Connor. So I know we've been talking about Basel 3, which is at this point in the air, and it's what has been preparing accordingly for that shift. And also with the LCR ratio adjustment as well, and Scotia pretty well capitalized. I recall, Audrey, Madam CEO speaking in the past about, at the AGM, about the balance between growth, between regulatory changes, and meeting shareholders' preference for higher dividends. So Scotia's current capital adequacy is around 14.5% for the bank in particular. Although Basel III is still, not fully known at the time it's been implemented, is there a potential, based on the current growth rate, that dividends might increase? I know it's not a guarantee you can tell me, but I know that you have to consider the other constraints.
Right. So as you mentioned, David, this is something that we continue to assess on a quarterly basis, and we do look at it with the lens in terms of the growth of our portfolio, shifts in terms of the composition of our balance sheet, as well as looking at that transition as we continue to do parallel reporting. So as you say, it's not something that I'd be able to guarantee you to say that dividends will increase in the near future, but it's something that we do assess on an ongoing and a quarterly basis.
Okay,
Thanks,
thank
Gabrielle.
you so much, Gabriel. Thank you,
Hello?
David. Al, I
Hello?
see you. I see you, Al. And
Yes.
after you go, I'm just want to acknowledge that question from Stephen. So go right ahead, and also to be mindful that we're 2 minutes out. We're at 10:58. So go right ahead, Al.
I'll make it quick. This is a question for Sabrina. Sabrina, I know the uptick, 27% increase in the last couple of years, particularly under your tenure. Scotia Investments is on the up. But do tell me, you don't seem to bring a lot of companies to market, to the stock exchange. Why is that? Why doesn't Scotia Investment engage in that activity?
Well, thanks for recognition of the results. I'll appreciate that. We continue to work to see improvement year over year. As far as bringing companies to market, we do participate in capital markets. Some of the activities we do may not be public or publicized. I think the most recent one where we had media releases and so forth was bringing Fontana, doing a debt raise for them. And we have a number of other transactions in the pipeline. Some have closed, some publicize, some do not publicize. And as far as bringing companies to market, we're always looking for great companies to partner with. We work very closely within the group, especially our corporate and commercial team, to identify clients that we work with and ensure that we're able to do the raises that they're looking for. But I definitely wouldn't say we're not in the market. We're always in the market.
Okay.
Thank you, Sabrina. Al, that's it for you? You're okay with that?
Yes, that's it for me. That's it.
Great. All right. So Stephen is asking, the return on equity is around 14%. Is this an acceptable ROE for Canada, which has been pulling out of Latin America and parts of the Caribbean due to what they consider risk? What is Scotia Group Jamaica's optimal ROE?
Stephen, sorry, that's a very loaded question. Thank you for the question. Let me just address the issue of Canada and LATAM. As was publicized by our global CEO, Scott Thompson, Scotiabank is pursuing a North American strategy along the North American corridor. So that's Canada, US, Mexico, and coming all the way down to the Caribbean. So Scotiabank continues to have an interest in the region. As a global bank, and you would have seen it, that our Q3 results were very strong, and the market really paid us handsomely for those results. And also, in terms of LATAM, it wasn't a pullout of Colombia or Central America. It was a strategic decision to partner with a large company bank in that region, Da Vivienda, and Scotiabank took a 20% equity stake in that institution and rolled our Colombian, Central America operations there. So that was very well publicized. That's market knowledge, and we're very pleased with the early results that we're seeing. That transaction is not yet complete, but it's a great partnership and great synergy with a large company that, excuse me, has a presence in that region. In terms of our ROE, yes, it is acceptable. We continue to focus on driving a greater return on equity for shareholders, and sometimes that may vary a little bit, but what we're very happy with is that we're hitting the hurdle rates and the benchmarks. But you can rest assured that that is one metric that we have our eyes on, and that will continue to be strong in terms of our returns.
Thank you for that, Audrey. So we're at 11:03. If there are no further questions at this time, I really wanted congrats. Thank you, Stephen. Thank you so much. Stephen is saying congratulations again, team, or job well done. And if there are no further questions at this time, really just want to thank our guests for joining us and wishing you a great rest of the day. Thank you again.